Hey everyone, welcome to another episode of the Remote Real Estate Investor. I'm Michael Album, and today I'm joined by Daria Davydenko, who leads sales and operations for Roofstock One. She's going to be talking to us about the state of the single family rental market as a whole, as well as what Roofstock One as an offering is. So let's get into it. Hey Daria, thanks so much for taking the time out of your day to come hang with me.
Thank you for having me, Michael. It's always a pleasure to chat, and especially about single family rental space. We are so passionate about it, and always, good to talk about the space.
Absolutely. No, and I'm thrilled to talk about it and thrilled to have you on. And so obviously you and I know who each other are. We go way, way, way back. But I was wondering if you could share with our listeners a little bit about who you are, what is it that you're doing at Roofstock, and what are we going to be talking about today?
Yeah, absolutely. So my name is Daria Davydenko. I am part of the Roofstock One team. Prior to Roofstock, I was in Goldman Sachs, vice president at Goldman Sachs, and I decided to switch and join an exciting and growing company like Roofstock. And I am even more excited to talk about Roofstock One, which is a new product that we have just launched a couple of weeks ago. And I can't wait to tell you more about it.
Awesome. So I would love if you could talk to us a little bit about how Roofstock One got its start and why does it exist?
Yeah, so it was a very interesting story. Our co-founder, he was on the phone with one of the investors, and Roofstock is a marketplace where we sell single-family rental space to potential investors. And so we got on the phone with one of the investors, and we were just curious, like, hey, what can we do differently to, maybe improve something on our website so you can purchase, some single family rental homes for yourself and grow your portfolio. And it was very interesting because investor came and say, I feel like that the minimum is really high because you will literally need to commit $100,000, $200,000 just to get a one single family rental home. And I'm not very, I have never done this before, so I'm a little bit nervous about it. And so we kind of got off the phone, and I think, that kind of started the whole idea of, after talking to the investor about fractional shares of homes ownership. So we were kind of the first company out there who started that. And Roofstock One is the result of our intensive research in the space, how to make this work, how to make the single family rental fractional ownership work, and how to make the single family rental space more accessible. So we are really looking to democratize the space and make it available to investors who have never done it, who are looking to add single family rental space to their portfolio, but maybe they don't want to be involved on day-to-day basis. So that's kind of where the Roofstock One comes in and helps to fill that gap.
Awesome. What an interesting backstory. So anyone who's listened to the podcast for long enough might be saying, well, Michael, you're a multifamily guy. I talk about it regularly. What are you doing with a single family home company? So I'm curious to know, for all of our listeners that are interested in investing in rental real estate, some might be leaning towards multifamily because I've indoctrinated them over the years. Why? And could you give us some background into the single family space over the last decade or so?
Absolutely. And I'm very excited to share some information because 2021 has been an exciting year for single family rental space in general. And I think just kind of seeing some of the numbers, I feel like it's on everybody's ears. Like everybody heard single family rental space has been very much on mind of every investor out there. But totally. I feel like once you kind of get it into your mind and you actually see the numbers, it just puts everything into perspective in terms of exactly how much is it growing and how much opportunity is there. So before I go into the details, I just want to kind of throw it out there that, please remember that past performance may not be indicative of future results, and different types of investments involve varying degrees of risk, and there can be no assurance that future performance, will be profitable. And you should not assume that any discussion or information we provide in this podcast serves as a personalized investment advice. And, we just want to make sure that all our listeners consult their own accounting, legal, tax advisors to evaluate risks and consequences and suitability of any investments for their personal needs. without reliance on, what kind of, I guess, we are providing here. This is more for information only.
Perfect. Well, thanks for sharing that.
So putting that aside, let's dive in. So I think it's very important to just kind of start from the beginning that, after the financial crisis, I think the home prices kind of went down. And I think that's where some of the large institutional investors kind of realized that, the home prices are, really low at the moment, and it could be a good place to kind of start jumping in. One of the things that was not available is cheap debt. So, and it was really hard for, I guess, single family rental spaces. So, it could be like this, homes could be in different regions or in different states, and it's really hard operationally. So I think that it's been a very good run for the industry, starting from the financial crisis up until now, where, thanks to the technology, thanks to companies like Roofstock, who allowed, for some technology to solve some of those issues that many are facing with having to manage single family rental homes by being in a different state. So technology kind of makes it more visible, more real time. Now maybe you can take pictures of, your homes when turns are going through and kind of see all these results real time. So thanks to the technology, I think that kind of attributed to this huge growth in single family rental space and, the investment that goes in here. So if you look historically, I think from 2006 to 2018, the number of detached single family rentals in the US grew by 30.1%. So to nearly 14.7 million. That's according to the Urban Institute, and that's a significant amount. And then I think if you take into consideration all the different types of single family rentals, that includes 1 to 4 unit, that's actually a 23 million single family homes market in the US today. And only around 2% are owned by large institutional investors. And that's according to the National Rental Home Council. That's kind of the data. They have done some research, and they have measured out, out of all the single family rental homes in the US, how much is actually owned by large institutional investors. And it's actually very little. Surprisingly, single family rental homes have performed really well during the COVID. So some investors would come in and say, well, in COVID times, because the stock market went down and, there's a lot of uncertainty. So how were the occupancy rates in single family rental space? And surprisingly enough, but actually in COVID, the occupancy rate stayed really high. It was high 90%. I think there could be two reasons for it. And one is, families now need more space, given that everyone is, you and me are working from home at the moment. Mm-hmm. And, given that some people have kids and, other family members as well. So there is kind of just now a need for more space. So people are moving out actually of larger homes or larger cities, in apartments, living in smaller apartments into maybe somewhere in the suburbs, but living in a larger home where you can have, your family live there and have enough space to do, your work from home, take phone calls, etc. And in addition to that, I think that, again, to the uncertainty that's providing by the current situation, some people are not really ready to purchase a home and say, this is exactly where I want to be for the next 10 years in my life. So a lot of people actually opt out to rent single family rental homes. So that's kind of some of the contributions why, we see that occupancy rate actually have been in the high 90s.
And Daria, a question for you. And there's kind of two ways that occupancy is measured. One is physical occupancy. So are there physically people in the home? And then there's economic occupancy. So are there people in the home that are actually paying rent? And during COVID, we saw that there was this eviction moratorium. And so we heard horror stories of tenants not paying rent for potentially months on end. Do we know if this high 90s figure is for physical occupancy or is that for economic occupancy?
So this is for the economic occupancy, but I also do know that even though there was a moratorium, we still have seen the collection rates in the high 90s as well.
Okay. So for anybody out there that said, oh, everybody stopped paying rent and was just living for free, Might not have been the reality case. All right, cool. Well,
yeah, I mean, yeah.
Those are all great indicators.
Yeah, that's kind of the data that is out there in the market about the single family rental space. And I think that's another reason why we have seen such a huge inflow of institutional investors into single family rental investments of all kinds. You know, some are investing in build to rent space because they believe that that's going to solve some of the issues that we are currently facing, which is, you know, right now, I think we have 5.5 million homes short where, you know, we should be in the US, and which is actually contributing to, you know, there's shortage of housing, obviously, and that kind of contributes to the home prices appreciation that we have seen. And especially in this year, I think it was like on average, you could have seen your home price grow, you know, 10% this year alone, which I think, you know, we probably have seen in some other years, but it has never been this much. And one of the reasons is because there is a shortage of homes. Millenniums are keep on, you know, having families now, you know.
Those darn millennials love having kids.
They now have, you know, larger families. They need more space. So everyone, you know, need kind of a home for themselves. And I think that we just don't have enough homes in the country right now. And I think that there is a, you know, lumber shortage, you know, that attributes to kind of the slowing contribution of like a newer homes building. Then there is like this workforce shortage. So there's a lot of different kind of contributions that all add together to the shortage of homes in the country. And that also contributes to home price appreciations going higher. And of course, it hasn't been unnoticed. And so we have seen a lot of kind of institutional investors start like announcing, you know, different funds, especially for single family rental space. So they are out there looking for, you know, getting into the space and owning a rental home, given the occupancy rates are so high, collection rates are so high, home prices are going up. And, you know, given where we are at right now, there is kind of no sign of slowing down in this market.
Yeah.
So, you know, there is kind of this opportunity. And given that there is only 2% owned by large institutional investors, there's just a immense kind of potential growth in this space. And it's really just starting by all these indicators.
That's incredible. So one thing I just want to kind of come back to at the beginning of this kind of data outlet, you were saying that over from 2006, 2018, the number of single family rentals grew by 30.1% to like 14.7 million or something like that.
Yeah.
And then you said we're still 5.5 million short of where we need to be. Yeah.
We're still short. And this is according to a report that was done by Rosen Consulting Group. They have done a report as of June 2021. They just basically compared, I guess, the population growth, the number of new families being formed in the country versus like the number of homes available, you know, for people to occupy. And it's just, there's a shortage. So.
Holy smokes.
Yeah.
All right. Well, I know we came here today to talk about Roofstock One, and we're going to get there in just a minute. But all of this to say, and you just mentioned that you don't see the data suggesting that this is going to be slowing down anytime soon. So what I want you to do is break out your crystal ball. We've done this on the show before with other guests, and I want you to tell me and our listeners: do you think we are due for another 2008 housing crash? If so, why or why not?
I don't like to do crystal balls, but again, the data that I have at the tips of my hands that we constantly analyze, especially at Roofstock, we constantly look at single family rental space, at the market, at different economic things, you know, anything that kind of might influence the space. And I think traditionally, you know, like any other real estate asset class, single family rentals have a relatively low correlation to stock market. And you probably have seen with this new variant of COVID, the stock market, you know, went down pretty significantly. A lot of people started panicking. So you see all this kind of fluctuation in stock market. But, you know, comparatively to that, single family rental space is, you know, kind of more stable, I guess, by the nature of this particular asset class. But it can help to diversify your investment portfolio, that you have one portion of your portfolio sitting in the stock market that fluctuates here and there, but then another one that's a bit more stable, just kind of keeps on providing you some rental income that keeps on appreciating in values. In terms of I guess another kind of thing that was recently on everybody's mind is inflation. And I'm sure you've heard about it. It's all over the news. But again, what traditionally have been, people think of real estate in traditional sense that it's also considered to be a good inflation hedge. And one of the reasons is that during the inflationary period, when all the, prices are rising, the real estate asset class has an opportunity to adjust and in some cases outpace inflation through the rent growth. And then there is another aspect of the real estate investment is that this home price appreciation, it almost acts like an equity kicker. So you've got your, rent growth that kind of helps you outpace inflation. And then you have this home price appreciation that kind of increases your equity. I mean, I think I just kind of more like in traditional sense, how single family rental space has helped, investors to diversify and hedge against inflation. But also kind of just given some of the data that we have seen during the COVID and kind of just even around like recent years, I feel like we are like in a better space now that given that there is a lot more control over the banks and how much, they have to keep in their reserves for, cash reserves. And kind of there is a lot more stringent regulations when you are getting a mortgage on your home. Like there's just so much more that goes into it. I was getting a home like mortgage for my house, and it's just the amount of, scrutiny that goes into there, like the amount of analysis that's being performed. I just feel like it's completely at a different level where it used to be back in when the financial crisis happened. So of course, I think that it's really hard to say, never say never, right? But I feel like that all this kind of indicators that we are seeing, we are not really seeing that this kind of current environment is going to slow down. And given that we do have such a huge amount of shortage in homes and the population continues to grow, people need space to live in. And I also want to kind of just tell you that there was a study that was actually conducted by John Burns Real Estate Consultant and NRHC, who they have created something that's a single family rental market index. And it's basically like a quarterly survey that gauges industry health by measuring some factors such as median rent, leasing activity, occupancy. And so what they found is that this kind of market index rose to 90.3 out of 100 in the first quarter of 2021 from, 62.5 out of 100 from a year earlier. So we just kind of continue to see that, I guess probably, some of the things there's COVID, there's just people kind of looking for more space, newer families looking for places to live in, and shortage of homes, like all contributing to people need to they want to go into single family rentals. They want to find a place to live and they want some space where they can live as their family. And, traditionally, maybe people who couldn't afford to purchase a home, maybe they were people who had some issue with their credit history. Maybe they were just kind of traveling for work, the work, due to their work, they had to go from place to place. And that's kind of the reason why they chose to rent. In this kind of environment, we are seeing that actually people who traditionally might have bought a home, now they choose to rent because maybe they want to, try out different areas, different state and see if that particular lifestyle, works for them. Or
rent a van, perhaps.
Yes, exactly. And so we are just seeing a different type of people who choose to rent versus buy homes. And those people usually have a much different, different reasons for choosing to rent versus buying a home. And some of it is contributed to COVID. Some of it is their work. And some of it is just lifestyle changes, California is notoriously expensive and lots of people are looking for a new place to live, but, they're not sure which state might be suitable for them. So they try to live in one place, then another one, then some other state until they find a place that they truly feel comfortable living in. And maybe, they've got a great school system, kind of you name it, all these kind of different considerations before they actually put like a large amount of money on their house and say, yes, this is where I'm going to stay for the rest of my life. And I want to buy this really expensive home and pay a mortgage on it. So
good to know. And you heard it here first, folks. That's Daria's take on where the economy is going. No, that's great. That's great. I want to shift gears here a little bit and really get into the meat of what we came here to talk about. And that's Roofstock One as an offering. And so can you talk to our listeners about what Roofstock One actually is and how they might be able to utilize it to their benefit?
Yeah, so Roofstock One is an innovative real estate investment platform that gives investors an easy and cost-effective way to add single-family rental asset class to their portfolio. I do want to mention that at the moment, this particular product is only available to accredited investors. One of the reasons is, due to the regulations, we are only allowed to admit like accredited investors into the program, but we are actively looking to find new ways to make this available to a larger public.
Okay. And for those who maybe aren't familiar, what is an accredited investor?
So there are 4 ways you can become an accredited investor, or if you're an accredited investor. One is if you are making $200,000 per year, and you are making $200,000 in the past 2 years, and you are set to make $200,000 this year as well, you are considered to be an accredited investor. If you and your spouse together make over $300,000 this year and in the past 2 years, then you are also considered to be an accredited investor. Maybe you also will be accredited if you have a $1 million of net worth, and that could, you could include in there your 401k, IRA accounts, your bank accounts, investment portfolio, anything that's outside of your primary residence can count towards your net worth. And in order for us to accredit someone, we usually will just require either, like, you could provide us a letter from your CPA. Any CPA or investment advisor could issue just a very simple letter that says, I'm a CPA of this particular person and I confirm that he is or she is accredited. And that's all we'll need to, can accept you into the program. Some people, they do kind of provide us with their W-2 information or tax returns or just bank statements, just to kind of qualify, based on their net worth or income. So we do kind of work with different types of documents, but if anyone has any question, we are always happy to answer and help to figure out what would be the easiest way for you to get your accreditation verification with us. So as we have discussed earlier, you have seen that this year, and I think in the past few years, you have seen a large inflow of institutional investors into the space, given that they have seen how well single-family rentals have performed during COVID. We want to make this available to individual investors out there as well. So Roofstock One is designed precisely for that. So now, you as an investor is able to create your own strategy with Roofstock One, without having to put a lot of money into this asset class. So we are, as a program, you can come in with $5,000 and you can purchase, we call this kind of common stock and tracking stock. And tracking stock and common stock combined, they all kind of allow you to create your own strategy. So it depends if you want to be kind of exposed to all of the homes inside the Roofstock One, or you prefer some certain strategies. Maybe you like certain regions or type of homes. You can come into the website and you can customize to whatever fits your own needs and kind of strategy, and create your own customized portfolio that will be completely managed by Roofstock One. So we take care of all of the day-to-day communication with property managers, tenants, pay for taxes, pay for insurance, HOA. And you as an investor just enjoy the kind of distributions on quarterly basis from the rental income, and potentially also have some appreciation of your homes in the future.
Interesting. So I'm going to paraphrase back to you and explain how I understood that, and then you can help correct me if I get off the rails here, okay?
Yeah.
Okay, so Roofstock One is a privately held REIT, basically, like a real estate investment trust. And within the REIT, I can, if I'm an accredited investor, I can bring $5,000 and I have my choice of tracking stocks or common stocks. And the tracking stocks are specific to maybe a region or to a group of properties. And the common stock is all of the properties that Roofstock One owns. And I can decide how much money of that $5,000 minimum investment goes into tracking stocks or versus common stocks. And I don't have to do anything after that. I mean, Roofstock One just manages all those properties for me. I'm not calling the property manager, telling them, hey, we got to screen this tenant better, or we got to coordinate this repair. Roofstock does that for me. Is that right?
Yes, precisely. You got it. Absolutely correct. I think the beauty of that, we haven't seen, I guess, other platforms do the same offering out there for other users, is that you can come in and within the same, I guess, product, you can design and customize your own strategy, pick and choose. And one of the kind of interesting things that we kind of came up is that our tracking stock, it is a security offering that returns, these returns that reflect economics of the fully managed single family rental properties. So usually tracking stock is comprised of you can think of it as like a mini portfolio. It usually consists of 8 to 10 different single family rental homes that are pre-assembled based on their attributes like region, or like you have mentioned, investment strategy or home type. And once those kind of homes are assembled inside the tracking stock, we will not be switching them from that tracking stock. So they will stay there as is. An investor can, we try to provide as much information as any investor would need to make their investment decision. So we provide the address of every home. You can go online and search and look at the pictures of those homes, or we provide, information about how much was, the cost of those homes and how much we had to put in to renovate it to make it available for rent. And we also allow investors to play around with some of the assumptions that we have put in to really understand how we came up with we do provide some target financial information about how, if you were to invest into this particular set of tracking stock, and in this particular set of homes inside the tracking stock, how it could potentially, how much, yield you could potentially receive, or what could be an IRR after 5 years of you kind of holding this investment. And of course, some of the assumptions that we have used are actually, so we have done an analysis of every single home inside this tracking stock on zip level. And we looked at the past information and measured, okay, on average, how much the home price appreciation went up for this particular zip code, or homes in this particular zip code. And then that's how we kind of measured in the past 5 years on average, how much was the home price growth in this zip code. And then in the past 10 years, what was the home price growth. And that's kind of how we came up with some target IRR information for investors. But given the tremendous run in 2021, some investors could come in and say, I think you guys are too conservative. I think that this amazing cycle that we are seeing in single family rental space will continue in the next 5 years. And I think on average, just like what we have seen today, maybe the, home price appreciation will go up 8%, 10%, like you name it. So we do allow investors to play around with those assumptions and see how that will impact their potential investment outcome from this particular Roofstock One investment.
Interesting. So I can take my $5,000, I can pick a tracking stock, I can change the performance and I can change the assumptions of the performance and then see what my return looks like for that particular set of homes inside that tracking stock?
That's precisely that. Yeah, we allow you to play around with kind of all the important information. Like you can change, I think, the gross yield on this tracking stock. You can play around with rent growth. You can play around with home price appreciation numbers. You can also play around with expense ratio. Maybe you feel that given the vintage of the homes in this particular tracking stock, maybe you believe it will cost more to maintain this home. So maybe you can factor that in. But we are trying to make this investment transparent, give all the tools that investor would need, traditionally to do maybe research. If they were to acquire this this particular set of homes on their own, we believe that there would be a lot of research that goes inside that kind of decision-making process, but we kind of try to break it down into simple terms and try to give all the tools to investors to, analyze it and then make an informative decision. And I think that by buying a single share of tracking stock or common stock, investors get an instant diversification. So just with one share of a tracking stock, you get exposure to all of those homes inside that tracking stock.
That makes total sense. So I'm curious, Daria, aside from the requirement of being an accredited investor, who would be a really good candidate for Roofstock One? Who does this make sense for?
Yeah. So I think aside the accredited investor, right now we are only allowed to sell this particular product to people who reside in the US.
Okay.
We do hope to, again, make this available to anyone who might be residing in the other countries in Europe or Canada, but we are not there yet. So at the moment, it's only for US residents. And also, if you enjoy like a landlord experience, you really like the day-to-day aspects of managing single-family rental portfolio, Roofstock One is truly designed to be a passive investment for you. So you truly can just put in your $5,000 and, you can anytime log into the dashboard and see what's your overall portfolio allocation is, how much diversification you are getting. You can see what was your distributions year to date, this quarter. So kind of get enough information for you to know how you are doing. But, you wouldn't be able to interact with the property managers because that's all done behind the scenes by us. So that's truly is, I feel like it's a very innovative platform because we are trying to kind of give you that diversification that then every investor is looking for, I think, because it will. One of the another reasons we kind of created this as a mini portfolios inside the tracking stocks is that it can help you to reduce your risk of exposure to like a single family rental home that you might have if you only have just one home. So if there is a turn on that home, your rental income might be affected. But if you are getting this instant exposure to 8 to 10 different homes, even if one of the homes currently has a turn, you're still getting exposure to the rest of the homes and rental income from the rest of the homes. So hopefully that kind of solves for that issue for the investor.
So Daria, I'm curious to know too about like what the time horizon of the investment is. Is this something, if I'm an accredited investor and I want to be passive, but I want to day trade my shares, is that something that I can do as part of Roofstock One? Yeah.
So given that it's a private REIT offering right now, we ask investors to come in with 5 years in mind for investment horizon. We do have some limited redemption program for investors who have some emergency situation. They really need to redeem the funds from the investment, but in general, it's very limited. And I think we are looking to create a secondary market trading platform in the future for this program. At the moment, we don't have it just yet. So that's why we can't guarantee that anyone who come in, we guarantee we'll have that platform in the future. But we do want, to let investors know that we do have it in our roadmap. So we do want to make it available in the future, but we don't know just how quickly it will become available. So in general, 5 years in mind. And there is an additional, aspect to 5 years, right? Like usually it takes 1 to 2 years for you to stabilize your rental home. And then I think it usually takes around 5 years for you to see decent amount of home price appreciation. So it seems like a really good timeline to keep your investment in the program, especially in asset class like single family rental space. Of course, anyone could argue that, if we are to have the same home run as we had in 2021 and 2022, 23 and up to 25, then, some investors might want to withdraw their funds earlier. But, you could argue, who knows what's going to happen in the next 5 years. It could slow down or it could keep its pace. Right. But in general, I think 5 years seems like a good time to keep your investment in single family rental space.
Okay. And then so what happens at the end of the 5-year period? If we look at a particular tracking stock, let's say, is Roofstock going to sell those homes? Are they going to refinance those homes and then pay off the investors that want out? What's the mechanics look like?
Yeah, I think In any case, the investors will receive their liquidity at the end of the 5 years. We do have some investors who have reached out and they have mentioned they want to continue to hold their investment. So I think once this 5-year time horizon kind of happens, and depending on what's the situation in the market, some investors might want to continue to keep it because it's just been such a tremendous run for them. But for those who seek liquidity, we'll definitely kind of provide them that liquidity and redeem their investment, meaning that they'll get their, whatever that principal that they have initially put into the program, and they could potentially also get that home price appreciation if, the market continues to be the way it is.
Okay. Awesome. Well, Daria, this has been so much fun, super informative. Anything else investors should know about the program?
Yeah, I think one of the kind of most frequently asked questions we receive is kind of what is the difference between common and tracking stock? And I think you can think of common stock as that kind of overall exposure to REIT. And then tracking stock is that you can, of course, this is not legal terms, but you can slice and dice REIT and only get exposure to certain parts of that REIT or certain regions or certain type of homes. So that's what tracking stock is. Common stock is really good because it offers investors a broad-based diversification opportunity among all of the properties in Roofstock One. So it really makes it fun. Anyone can find something that they're looking for when they come to Roofstock One website and really build their own strategy and focus high level on kind of where they want to be and where is that next growth opportunity will be at, and kind of focus on building that out. And we are going to continue to release some new tracking stocks on our website so investors can have fun and, kind of check out maybe some new markets we have released or new type of properties and see if, they can add to their portfolio if they wish so, or they can wait for, maybe another opportunity that will come along.
Okay. And if people want to learn more about Roofstock One, invest in the platform, have additional questions, what's the best way for them to either get a hold of you or your team or learn more about it? Yeah,
they can always email us at one@roofstock.com. And do
they spell one or the number one?
It's ONE, at roofstock.com. And we will be happy to assist or even just chit chat about single family rental space. We love it. We follow it, and we are always available to talk about it.
Awesome. And does Roofstock One have its own website as well?
Yes, it's www.roofstock.com/one. For anyone who would like to check out our website and, register and see, what investment opportunities we provide.
Awesome. Well, Daria, again, this has been great. Thank you so much for coming on and nerding out with me and sharing with all of our listeners what Roofstock One is. Really appreciate you.
It's a pleasure. Thank you so much, Michael. Thank you for having me. And thank you for the listeners who joined us today.
Awesome. Take care. We'll talk to you soon.
Bye. Thank you so much for listening and tuning in with us today. We just want to provide you a reminder before we leave is that Roofstock One Inc. is not registered as a broker, dealer, investment advisor, or investment manager under the U.S. Securities Act. Roofstock One's offering are made in reliance on the exemptions from the registration requirements. Right now, you can look at the private placement memorandum on our website, and we do advise that every investor read through the private memorandum carefully to understand all of the risks that are involved with investing into this particular program. You should not rely on any past performance or forward-looking statements when evaluating an investment opportunity. And we always recommend that our investors consult with their own accountants, legal, financial advisors, or just to evaluate all the risks, consequences, and suitability of any investment for your particular needs. And with that, thank you so much for listening, and we look forward to see you into the program.
Okay, everyone, that was our episode. A big thank you to Daria for coming out and sharing with us a ton of knowledge, and really, really excited to see what Roofstock as an offering does from here. As always, if you like the episode, feel free to leave us a rating or a review. They are really helpful for us wherever it is you listen to your podcasts. And as always, we look forward to seeing you on the next one, and happy investing.